We're delighted to have Michael Vrontamitis, Head of Trade for Europe and Americas, Standard Chartered Bank, with us here today at Asia House. Thanks for being with us.
Thanks for inviting me in, Charlie.
Standard Chartered has launched a very interesting report, G7 to E7, the Standard Chartered Trade Performance Index, which looks at trade performance between the G7 countries and the E7 or emerging 7 economies. Could you give us an overview of what the report is about and what your findings were?
Absolutely, Charlie. So the Standard Chartered Trade Performance Index ranks the export performance of the G7 to an emerging 7 markets that we've selected, which represent about 20% of global GDP and about 50% of imports into the emerging markets. The emerging 7 index includes markets like Bangladesh, China, Pakistan, India, Indonesia, Vietnam, and Nigeria. And of the 49 trade routes that are between these G7 and E7, 40 were underperforming, which means only 9 were meeting their potential. Of the remaining 40 markets, that represents an opportunity of about $162 billion that the G7 could be exporting to the E7, and that's about a 30% growth rate opportunity for the G7 in terms of their export growth.
The report shows a lot of optimism that there is opportunity available to the G7 in terms of trade performance with the E7 markets. What are the big challenges for the G7 to reach that opportunity, and is there a risk that they'll miss that opportunity in favour of other trade partners?
That's a great question. The E7 really, I think this report is showing, represents a critical highway of future growth for the G7. The G7 countries and companies should really think about how to capitalize on this opportunity. So it's an opportunity that we haven't really specified in the report how to access that opportunity, but really it is about how the question that governments and companies should be asking is how to access this opportunity. And really it's down to a number of aspects. I mean, it's down to, relationships, personal relationships, understanding the business regulations in these marketplaces as they emerge and they evolve. I mean, you'll well know that China's regulations change on a regular basis, and you always need to be up to date on to what the latest regulations are. So important to have very strong on the ground presence. It's about the trade pacts between nations as well. So it's a number of aspects which offer the opportunity or would enable a company to take advantage of that opportunity that's there.
And Germany comes out with a glowing report as the top performer out of the G7 with the E7 countries in the report. What has Germany done right, or at least better than the other G7 countries?
Well, I mean, Germany's exports to China, the potential is about 58 billion, and they actually export 109 billion. So a significant overperformance on their potential exports, and really driven by a number of things such as the right products, and exporting the right products, the relationships. I know a number of very large German companies that have significant operations in China that have been built up over a number of years. Some of the car manufacturers German car manufacturers in China were early into the market, and they sell more cars in Germany than they do. I mean, in China than they do in Germany, for example. So these are the types of examples of why Germany is outperforming. But it really comes down to prioritizing, strategizing, and this is despite the fact that China and the EU don't even have a trade pact. So one thing I would say about Germany and its exports, while it's been really outperforming to China, it has underperformed to other markets like Vietnam and Bangladesh. So even though you outperform to one market, it's really important that you look at the holistic opportunity and not just one market, because that could lead to over-reliance on a single export corridor.
China is very important to the global economy. It's a very large economy, and it's been very important for the G7 and many other countries and multinationals from all over the world. But the economy in China is liberalizing, and it's upgrading from manufacturing to service economy. As China and many other emerging markets move up the value chain, does that present new opportunities for the G7 specifically, or could it provide challenges as China looks around for different trade partners?
So I think China is obviously moving very, very quickly and has had a tremendous growth and development. What we see with China is we expect China to remain as the largest trading nation, and so over $3 trillion of imports and exports. So as we see some of the manufacturing move out of China into markets like Bangladesh, into Vietnam, and so on and so forth, there are opportunities for increased exports into China. So the expectation is the exports into China will increase over time, and so that does present a significant opportunity in terms of upside. I mean, if you look at these 7 markets and 7 economies, they're the fastest growing economies, or one of the fastest growing large economies in the world. India over 7%, China near to 7%. So there's a lot of opportunity in terms of just the underlying growth of these economies.
And the US-China trade corridor is, of course, a very large amount of trade within the global picture. The report mentioned productivity increment opportunity of 22 billion on top of around 120 billion currently between US and China. Does that opportunity present an incentive from your perspective for a greater participation and cooperation between China and America, when of course we're seeing some tensions, we're seeing some renegotiations, and of course we've had some tariffs imposed on some goods between China and America? Are these opportunities enough to drive increased cooperation?
So the China-US trade corridor is a very, very important trade corridor, and a large proportion of US goods get manufactured in China or are made and finished in China. And a large proportion of the exports from the US get re-exported through China. So for example, a t-shirt made in China was probably got cotton produced in the United States as one of its key components. The United States and China are very have a high degree of integration in terms of their supply chains, and what we see is that there is an opportunity and what the report demonstrates is that the US has potential to export more to China, given the right policies.
Well, the report looks at the G7, E7, but of course looking at the emerging markets more widely, there's been a huge growth in prosperity driven by urbanization, the increase of the middle class population within those countries, the proportion. How do you see the opportunities more widely, and how does the opportunities you've looked at for the G7 fit within the wider opportunities with the emerging markets?
Well, the emerging market share of world trade has increased quite significantly, from about 25% in 1990 to around 52% in sort of the mid-2015. And as a result, what we've seen is South-South trade grow at the expense of North-North trade as a proportion. So South-South trade up about 16 points, North-North trade is down by about 20 points. But what's really interesting is that the share of emerging market trade has increased for most markets, so most countries, particularly markets, say, like the US, that has seen emerging markets as a percentage of their trade go from about 26% to about 50+%. So there's been a significant shift, really driven by the increasing wealth of the emerging markets, and particularly the E7.
Well, here we are in London. We can't escape Brexit, so I have to ask you about it. You mention it in the report as the UK moves out of the EU, potentially out of the single market, and the opportunities therefore presented by the E7. Could you tell us a bit more about that and what you think the opportunities would be for the UK? So
what we've done is we've looked at the UK, and the UK has an opportunity as it stands today of around $14 billion of incremental exports to the emerging 7. What we've done is an analysis where the Britain exits the EU on sort of existing terms, no view on terms of how the Brexit will happen, and on that basis, given trade diversion theory, we believe there's an incremental $16 billion opportunity. So the current exports from the UK to the E7 is around 33 billion. The opportunity as it stands today is 48 billion. Outside of the UK, we think that's around 64 billion. So quite a significant, there's almost doubling the opportunity space for the UK if it takes advantage of it.
And finally, Standard Chartered, headquartered in London, but very much this emerging markets are your spiritual home in terms of the business that you do and facilitate with companies of many sectors across the emerging markets. How are your practical observations in those countries vis-à-vis the trade and economic exchange with the G7 and the OECD countries?
Well, for Standard Chartered, obviously Asia, Africa and the Middle East is our home. We're headquartered in the UK, but very much our majority of our business is done in these places. We were set up along the trade routes over 160 years ago. And for us and for our clients, the opportunity is to work with an experienced bank in the market who understands the laws, the regulations, business culture, and has sizable presence on the ground in these markets to be able to support corporates as they expand and grow into these markets.
Michael Vrontamitis, thank you very much.
Thank you, Charlie.